Hello, friends. Welcome to another special episode at Weekend Investing, and we do these data-backed, studies on various aspects of the market, trying to enhance knowledge for our viewers, and also to set the right expectations from the market as one should have. So let's dive into some past details of how the markets have performed and what should be our expectations going forward. So in the last many years, and you probably have been in the market since last many years, have been quite rewarding, especially since COVID crisis, where Nifty went to as low as 7,500 from a level of about 12,000. So we went very quickly from 12,000 to 7,500. And then in the next uh, 1.5 years, we went from 7,500 to nearly 18,000. So this was a huge run that a lot of folks enjoyed. And then we had a period of consolidation and lull for about another 18 months. And then from July 23 onwards, we've been on a tear. Um, Market is again coming very close to a new all-time high and may continue to do so for a considerable period. We really can't say. But the fact is that in the last 3-4 years, on average, you would have made a lot of money, right? So newer folks may have entered assuming that this is like a normal market. So anybody who's been in the market last 3-4 years may assume that markets behave like this. There's nothing to lose. You come in every few months, you find that your portfolio is up 5-10%. What's the worst that can happen in the market? But yet, if we look at a very long-term trajectory, there has only been some short-term blips on the way. Otherwise, the trajectory is very much on the long side. And given that if you have a long-term view, the trajectory will take you forward. You don't have to do anything special. You just need to not do anything stupid. That's the only sort of caveat in the Indian markets. Now let's dig into some 3-year rolling returns. So we will do a CAGR on 3-year blocks of periods and see what have been the outcomes and what should be the expectations one should hold. This is the Nifty 50 3-year CAGR since 1993. So we're going back about 31 years. And if you started in 1993, the CAGR was 27%. In 1994, the previous 3-year CAGR was 58% because of Harshad Mehta period. In 1995, the previous 3-year CAGR was -8% because of this fall, and so on and so forth. So CAGR has been above 20 many times. It has been within 0 and 20 for a lot of period, and then it has also been in the negative for significant number of years, right? More in the 90s than in the later 2 decades. But yes, every decade, in 2009, in 2010, in 2013, in 2020, April, March, you had a 3-year CAGR below zero also. But overall, if you see, the CAGR has averaged about 13%. For a recent shorter term period, it may well be near 12% also, because we have not seen these kind of humps come in the last almost 17-18 years, which cause the averages to go up. So the current 3-year CAGR, so last 3 years, uh, is now at 13%, which is also the long term average. Uh, but if we were to distinguish between how many years or how many months were there when CAGR was below 13%, so that would be about 220 months of the last 31 odd years. And above 13% is about 154 months. So 41% of the time, this 3-year CAGR has been above 13, and 59% of the time, CAGR has been below 13. And below 13 means it could be negative as well. So let's look at some extreme data here. So total months we are considering is 374 months. Below 10%, has been 182 months. So almost 50% of the time, the CAGR of the previous 3 years is 48, is less than 10%, almost 50% of the time, 48.6 actually. 18% of the time, CAGR is between 10 to 15% for 3 years, 69 months. 11% of the time, it is very good at 15 to 20%. And 21% of the times, it is actually fantastic, above 20% or 80 months there. So you can see that while there is significant number here, but the rest is very well distributed between 10 to 15, 15 to 20, and above 20. So you can say 51.3% of the times you are doing quite well actually. 10% and above is quite decent, and about half the time is not so good actually. So what happens now when CAGR in the past 3 years is more than 13? So this case basically of 13% or more. Most of this case will be studied here. Uh, so now Nifty 50 3-year CAGR, past 3 years was 27% in July 1993. The forward 3 years post that was 14%. So it was 13% then, and the forward was 14, so not much of a change in this particular case. August 93 was 26%, forward was 9, September 93 was 23%, forward was 5, and then so on and so forth. So as you can see that as the previous 3-year CAGR exceeded 13%, the likelihood of the next 3-year returns to be positive came down, and actually to be negative went up. So you can see, 94, the last 3-year CAGR was 58%. The next 3-year CAGR was minus 8%. Let's look at more data. Again, all data which is 43%, 47%, 37% of the past 3 years. The next 3 years is extremely bad, right here. Uh, so there's a lot of data that has got crunched, and I'll come uh, uh, to the summary also. But then there was some change post the 90s decades, where in 2000 onwards, even if you had good, more than 13% past returns, you could have, forward really fantastic returns. You had really, really good returns going forward from there. Mixed bag, some up, some down. But one thing was standing out is that if you had phenomenal returns in the past 3 years, then the next 3 years were not so good. It was a rare scenario that if you had phenomenal returns in the past 3 years, you'll have phenomenal returns in the forward. And this is the summary where uh, these are the cases where the past 3 years were good, above 13. So the total occurrences over 121 months, and you can see the bulk of the next 3 year CAGR, approximately you can say 62% of the times you were below 10% the next 3 years. Only 22% of the times you were between 10 and 20%, and only 16% of the time were you really doing well, despite doing really well in the last 3 years also. So 31% is your probability that you will still do more than 13 if you were doing above 13 in the previous three. And you will 69% of the time you will have a poorer outcome in the next three if you were doing better than 13% so far. So what happened to 3-year forward CAGR when 3-year past CAGR was less than 13%? So now let's look at the reverse case, where 3 years have not been so good, and for good I'm taking 13% as the benchmark because that is a long term average. So if you were not good in the last 3 years, then what was the prognosis for the next 3 years? So while we are waiting, please go ahead and subscribe to the channel. My team has really worked very hard on this data. They would love if you would, support their motivation by pressing the subscribe button. Coming back to this, so again, if the past 3 years were not good, not necessarily that the next 3 years were good as well. Especially in the 90s, you can see past 3 years CAGR 9%, the next 3 years CAGR only minus 2%. uh, and 57% of the time still remained below 13%, even if the previous 3 years were below 13. So it is not an automatic correlation that if 3 years have been less than 13, then the next three will also be more than 13. 57% of the time you still remained below 13, and only 43% of the time were above 13%. Within that, uh, the ratio of doing well was the probability was much higher. So 37% of the time you did more than 10 to 20%, 10% of the time you did 20 to 30%, and another 9% for 30 to 50% also in CAGR for the next 3 years. So less than 10% was less, only 10%. 0 to 10% was 34%. So still, almost 57% below 13%, 44 here, and part of this remained below 13%. So a very positive market in the last 3 years has paved way for a lot of assumption and hope right now. So we have been in a very, very positive territory in the last 3 years. We are sitting at good 13% of the last 3 year, and you can see here that uh, this is the way 3 year rolling CAGR has moved in the previous 3 years. We've reached even 26% in March 2023, and because that was coming off from a base of low 2020 March uh, CAGR, but the average has been 17% in the last 3 years, and the rolling CAGR right now is sitting at 13%. So it's the 3 year average, the CAGR is very consistent with the past performance. So can we continue to have a 13% CAGR is the question going forward. So if we were to assume that the last 31 years of data is reasonably long, with the sample size of almost 360 months, if there is a correlation that we can draw from there, so then there is a 62% chance that we may see a sub 10% forward CAGR in the next 3 years. So right now we are sitting at in August 2024 with a 13% past 3 year CAGR. So the next 3 years are, there's a 62% chance that we will see sub 10% CAGR on the Nifty. There is a 23% chance that we may see a sub 0% forward 3 year CAGR. I know this is not going to sound very good. I don't want to demotivate anybody, but this is data, so we should hope for the best, but we cannot ignore the data, basically. I mean, if we are ignoring the data, then we are like the ostrich who buries its head in the sand and does not want to face the reality. So there is a 23% chance that we will see a sub-zero forward 3 year CAGR based on the current data. And there is, of course, some smaller chance that we will do really, really well in the next 3 years. So being prepared for corrective action in the markets, being prepared for consolidation in the markets, uh, and embracing the lows of the market, the fall in the market, the consolidation of the market as part of this journey. See, we all really like when our portfolios go up, when everything is doing well. But we also must understand that that is only one part of the journey. The other part of the journey is also to be embraced, and both put together is the complete journey. You can't have the cake and eat it. That is the sort of bottom line. So wealth creation in the very long term requires you to brace and embrace the falls and the step back in the markets whenever it happens. It may not happen for the next 1 year, it may happen tomorrow, nobody can really say. But whenever and whatever it happens, the long term view is very much intact. If you remain with the markets, if you remain with strategies that are self-correcting in nature, there is no way that you will not get a fantastic CAGR out of that. So that's the message from this video. Do let us know if you like this content, and of course, please do send your comments. It is great to read your comments and interact with you there. And also, it gives us a lot of feedback about this content that we are making, whether it's good, it's bad, it's whether you're liking it. Do subscribe to the channel if you haven't so far. and do share these videos with your friends and family. Who knows who may benefit out of it. Thank you so much. Bye bye.